All right, folks, let's talk about GoPro stock, ticker symbol GPRO. It is making big news today because of the fact that it closed up 20% off of news that GoPro did a coup d'etat on Apple Inc. by taking Danny Koster, who is one of their best product designers. And by having Danny Koster on board for GoPro, it is hoped that it would help to reinvigorate sales. And of course, 20% on over a single day. I mean, that's just big news. So, should I buy GoPro stock? I would be very cautious. Who knows what's going to happen in the future, but I would be very cautious because this acquisition of Koster's services is very strange. You're looking at a product designer who is very good at what he does. However, product design has never been the biggest problem for GoPro. The design for GoPro as it is it is a very attractive chassis. It has inspired other copycat competitors. It's very sleek. It looks great. So the product design element hasn't been an issue at all for GoPro. The real issue here is market saturation. The whole point about the copycat competitors coming in, when you go into the retail shops and you look for the action cameras, they all start to look pretty much the same. I mean, pretty much every camera company has an offering. You got, Sony with their action cam. You have, JVC. I mean, who's ever heard of JVC? But now, they have their, action cam. You have action cams that are built into a pair of sunglasses. That's pretty popular. I mean, you have big names and no names producing action cams. It's such a saturated market, and it becomes very difficult to differentiate between one and the other. It's become a commoditized industry, and that's pretty much the worst thing that can happen when you are the industry leader, when that industry becomes commoditized. That allows copycat competitors to come in and they can chop you on price. The thing about being chopped down on price is particularly painful for GoPro because their earnings performances isn't all that great. I mean, you're talking about net income. Last year, I think they made $36 million net income on revenue that for about, on revenue about $1.6 billion. You came out making $36 million. That's a pretty dramatic loss. And I mean, there's just so much overhead costs that have been, jacked up. I mean, yes, the revenue has grown exponentially, but the problem is that the cost structure has also jumped up even more, even to a greater magnitude. And that's why even today, to this very day, the valuation of GoPro stock is very rich. The stocks are trading 60 times earnings, 60 times trailing earnings. You don't even want to look at how how overvalued they are against forecasted earnings, against future expected earnings. It's pretty freaking crazy. This is not a cheap stock, even though the price went down to roughly, $14. Okay, with a 20% leap today, $14. The thing is, it's still very much overvalued. This is way too much. The stock is priced at a crazy valuation, even with the substantial losses that it has incurred since the summer of last year. So you have to be very careful, especially when you're going to buy a stock with a 20% move. You're looking at something that is technically maybe overheated. Maybe the market's reacted too strongly. Also consider that this is a heavily shorted stock, relatively speaking. I believe the short interest was about 30% of the float. That's pretty steep. And so when the short positions are covered, they have to obviously buy back the borrowed shares that were borrowed initially to initiate that short position. So there's a lot of technical dynamics occurring with GoPro stock that is causing this massive move up. I don't want to buy stocks that are moving up purely based on technicals, because the technical dynamics are not something that you can rely upon as a consistent form of support. What you really want to look at, the technicals are important, but you also want to consider the fundamentals. Is GoPro a fundamentally sound company? It is great in some respects. It doesn't have any debt on its balance sheet, so its balance sheet is pretty stable. But I don't like the valuation of the company based on its earnings. And I also don't like the pressure that the company will likely incur on the top line, on revenue. Because, again, we're talking about a saturated market. At any time now, you can have a plethora of copycat competitors come in and chop you down on price. What are you going to do? Who's going to buy a $400 or $500 GoPro camera when they have something else that does pretty much the same thing for $100 or $200 or $300 cheaper? It's too crowded of a market, and GoPro is pretty much only known for the GoPro camera. They're not known for doing anything else. That puts you at a considerable risk. Once that market gets even more saturated, how do you differentiate yourself as an organization moving forward? That's a big question. That's why the valuation is so rich. It's not that the stock is terrible. It's just that Wall Street is thinking ahead. They're not thinking about right now. See, right now, yeah, things are great. 20% move up. Wonderful. But can they continue to perform like that in the future, given some of the problems financially and also the problems within a saturated market? That's a huge question. I don't know. I simply don't know.